Good Fed Day, warriors. Just want to remind everyone today's the last day for a free consultation with Blake. If you're interested in the TFP, he'll prep you. How are you today, Ingmar? Saloom, that was the last train. Okay. I'll show you why it really didn't surprise me. Kman, how are you? Mike? James? Hi, Blake. Okay.
Morning, Dale.
Hey, how are you, Kay?
Yeah, very well, thank you.
Good. So I just want to start off. Blake was making fun of me when I said Iran's back on the table. Then we bombed Beirut. I had no inside information.
You
But
totally had inside information.
I
Didn't
didn't.
even tell us that
I
you had
just have
inside
trader
information,
and
that is complete
I
horse
have
crap,
trader
Dale.
intuition.
You knew it. You knew it.
I had a feeling because it was in my bones. And
Yeah.
anyway, it's putting
Sad,
in a
but
nice
yes.
day. So, even if you're bearish, and I understand the reasons for being bearish. I've seen all the bearish wave counts to $60 and then 40. But, what keeps haunting me is what Mark Chandler said. And, Mark's in our chat rooms, guys. He's hanging out with us. And, if you like Mark, you could go in there and interact with him. He said every recession that we've ever had starts with an oil shock. So, anyway, high or low, decent shot. Also, nat gas tried to come out of the hole. And, this right here, this area may take another stab down here. I don't talk about energy a lot, but you have to be aware of it with what's happening in the Middle East now and with Russia. So if we start holding and turning at this $2 level, it's pretty classic, left shoulder. It would take up some time. This is a weekly, but for it to, get back over 3 would set the bottom. This was the bottom. Look at the glaring divergence, and everyone got excited, pulled back halfway. Keep an eye on this puppy. And Dixie, I sold it yesterday before all hell broke loose just because, I wanted to do it at 105 and it was trading at 104.80. And I said, stop trying to be so perfect and at least put a piece on. That came off pretty good. We'll see if they could save it again and make a trip up towards 101. And this action was just, amazing, right? So the S&Ps have a chance if we close over this 55 level or start, get some candles above it to maybe make a move up towards 56. It's a 100 handle formation here. Okay, so we'll see. What, it didn't totally surprise me because if you took the after hours action into account yesterday, you had things like, I think they'll show this. Yeah, see that? What did you have down here? You had 3 drives there. Apple. Look what you had in Meta. So one thing to notice about TA is when you see formations starting to pop up, like ascending triangles, 3 drives, flags, you'll see them forming across different instruments. So this was another 3 drive completed. So, when I saw those candles, mainly it was because of this in the aftermarket. Look at that. All right. So we actually achieved some targets that I talked about. I thought that Microsoft could go to 200. So we've done that. And now maybe we'll get that rally.
But by the way, after earnings, I think at the low, Microsoft lost about $260 billion worth of market cap.
Yeah. Okay. It's still coming in 12 lower. But I was looking for 400. Doesn't show the 400 on the daily, but we got there in spades. So this makes it kind of hard to trade this now with these kind of ranges if you take in the aftermarkets. And then Nvidia, everyone was saying it was really all about Nvidia, even though it held up better than anything. And this is like a 2 drive here. So, maybe we'll get risk on again. Let's turn to currencies. And wow, you guys, look, Blake the day before called the zone of where he was shorting it. And we were short during, he was short during face and, said where it could go if we had, a different reaction. And I don't know if you held him overnight, Blake, but nice trade on the short side again.
Thanks. I didn't. I got out. Actually, I got out that earlier, like later that day at like 153.30, I think. And then I'm trading it all over the map. But who's got to be talking about it right now is Kman, because Kman was up. Bless his soul, he was up really friggin' early in European trade. Kman, have you managed to stay awake the entire time after waking up and jumping in the chat room?
And anyone got any matches to keep my eyes open?
Like
No,
the
I
old
did
cartoons, Dale.
I did actually manage to catch a 1 hour nap in between the first round of violence and then Ueda. It
Man,
was the most hawkish Bank of Japan meeting I've ever experienced, I think.
Well, okay, so okay, let me kind of piece it all
Yeah.
together for a lot of us here that are in,
Please
in the United States. So, after the Bank of Japan meeting, we saw a spike up to like 150. Well, we saw a spike down to basically, sub, like below 152, then back up to 150. 370s. That's where I shorted the dollar yen. I took a little bit of money out and I said, I'm done for the night. And I think everybody else, like you, Kman, you're waiting for Ueda's press conference. So explain to us why this is the most and was the most hawkish, BOJ meeting.
Yeah, basically they raised the highest that expectations could have been. They did the 15 basis points where the market was still reluctant. We've been calling for that 15 basis points for quite a while. So they delivered. Then they are reducing the bond buying program, but that one is a bit slower than what we could have expected. So they're going to go 400 billion tapering per quarter to end up just below 3 trillion yen a month in 2026 only. So that's your double leg. So we had the dump, 100 points dump on the announcement. Then you had the 200 points rally on the bond stuff, and then a few hours later, Ueda came on, and he is really leaving the door open for more hikes. Said that 50 BPs is not really a target, so they could go higher. Real rates are still very, very low. Even if they do another quarter, they will still be at very, very low rates. And it was extremely hawkish. Also said that then there was like a bit of a mixed tone where he said like, if the long-term yields rise too much, they could still do fixed JGP buying operations. That was a little bit shaving back, but he said that there was absolutely no stress in the yields right now, so they can still go higher. And
Wow.
of course, F.A.C.E is starting to have a greater impact on prices. So it was a really very, on balance, a very hawkish meeting from a guy who has been more sleepy than anything else, right? So far.
Yeah.
What do you
And
make out
so,
the yuan not following through yet and making new lows with yen? I mean, they've been pretty much tied at the hip.
Yeah, but we have a different scenario at play there, because there you have a government which is pushing the pedals to actually try to revive the economy. So they cut rates over there, and they are still injecting money, and they're putting plans in place. But what we need to note is if you look at take away the yen, the yuan is still strengthening a little bit. So versus the dollar. So I think that the investors are starting to wonder, not buying CNH per se, but starting to wonder whether China may possibly have something in hands to work with now. So I think the Chinese yuan is a bit of a different animal. I wouldn't go outright short dollar China yet, because it just cut rates, but it is following in the distance. But I mean, the Bank of Japan, Ueda, really, I think, surprised by his hawkishness overnight. And that's
and
where
that's and so I think, and I'm sorry, I wanted to actually I had to take over the charts, Dale, just because we really have to look at all these yen pairs. But I need to ask this question: being as hawkish as it was, that in itself, and you have been a very big, for, and rightfully so, literally for years, you've been such a yen bear, and just playing all of this move. I mean, you've been literally a yen bear, like up until, I want to say, today. Today, you sound decisively,
no.
really convinced that the BOJ is going to make inroads to normalizing monetary policy. Am I taking that away correctly at this
A
point?
bit too much to the other side. No, you know what? I've said for a while. I said, okay, now we're getting perhaps to levels where it is a bit stretched, and then I said, like, the Bank of Japan could raise. So I wasn't short yen anymore. That's already
Right. What I'm trying to say is, for like,
yeah.
since I've
But
known you.
but my very, very long-term view is that they are still going to run far away behind other people, because I'm not sure that Ueda is going to stay this hawkish forever, because still we have and that's where the longer end comes into play. Still we have this central bank thing which is not completely independent from the government, and they are not going to let the longer end run away, and so I think, yes, the market is completely turning. We have seen these moves, right? We have seen the move in 2022. We have seen the move in 2023. I've also said, like, be careful on the yen, because the type of interventions they did the past weeks, earlier in July. By the way, they confirmed the interventions today as well, the MOF. They're more like guerrilla style, and we have to be a bit careful now with the yen. And but my very long-term view is that we are going to find bottoms somewhere in yen pairs. I'm not saying today, and not perhaps before Friday, because we have the NFP. But if we get another 2-3% or so, I'm going to start to think that may be enough.
Right. We're probably, but you know what's great, guys and gals, if for those of you that trade the yen as actively as we do, there's going to be a lot of two-way price action. I think the takeaway here is they were extremely hawkish, and that's going to play into any bounce that we see in any yen, in the yen pairs.
For sure.
Speaking of which, so dollar yen, we all know what a big pivot the 152 level is. So any move back up to 152 or around that neighborhood is going to find sellers. Now we have major channel support coming in, like between here and 149. As I tweeted out a little bit earlier on the company Twitter account, 150 is going to be huge support for the dollar yen. There's got to be stops below there, and I would assume that the market's going to try to push them at some point today. It doesn't necessarily have to be like now, but or within the next hour for that matter. But I'm assuming 150 stops are going to get pushed. But take a look around. Euro yen 618 retracement, just a few pips below where we currently trade. Pound yen, we're coming into the 200 DMA. Aussie yen, as we work our way around. We're at long-term, you know, triangle support. Kiwi yen, we're trading below that long-term trend line support, but the Kiwi's been really underperforming. But, you know, Kman brought up to us in the chat room. So if you guys are in the ForexAnalytix chat room, he was pointing out, hey, there's a long-term trend line. And I forgot I had that one there, but we are slightly below it. I guess I could grab it and, you know, just say we're slightly below it as well. But then you look, we can overshoot technical levels. It's not uncommon. You know, here's the Canadian yen is trading below the 38% retracement. I would expect any rally to 110 now is going to get sold. And Swiss yen, 200 DMA, channel support. Mexican peso, Japanese yen, 38% retracement, just slightly below where we're at. That's why I think that any push below 150 might find buyers now, somewhere below there, because if you take a look at the yen complex, we are really, you know, just right into, you know, resistance. But look at this 6J. So this is my old, this is what I put from last week. The 6J is above the 200 DMA. We're nearing the 50% retracement, dotted red trend line. You can see it right here. We're coming right into resistance on the yen. This is the yen contract. So like I said, we're about ready to push 150 stops right now. I mean, as we speak. And I would assume there's going to be buyers down here if we push these levels. But they look like they're going to get pushed, don't they, Kman?
Yeah, definitely. It's going to take a while to digest this because, as I said, market isn't used to hear such a hawkish Bank of Japan either, right? I've got the impression there's a few barriers here at 150. It seems a little protected. I don't think it's going to hold. We are actually trying to break below. Not yet. A couple of pips away. Yeah, it's going to take a while to digest, and we have to see down to where or for how long this needs to be digested. And I'd really say to people, watch what's happening on the Nikkei, watch what's happening on the Japanese yields. The short end is rising a little faster than the long end. And again, it could last a few days. I think it will also, I think rallies will be sold in all yen pairs until, and especially in dollar yen until the NFP, I guess. Because I think the NFP are somewhere potentially more important than the FOMC tonight. Yeah, so I still think there is room. I have my trend line a bit lower than yours, but I don't know if 100 pips matters in dollar yen these days.
I don't think it does. Yeah,
exactly. I've got mine around 148.5. But and as I said on the flow show as well, and in the room, perhaps when it gets down there, but prices on the options are prohibitive right now. I'm going to perhaps start to look at the other side again. But it all will depend on the timing as well. You know, I wouldn't want to do it before NFP really flip around again.
Yeah, and we have so much happening over the next you know, a couple of days with an ADP just came out, by the way, in case you missed it. I missed it. I was too busy dealing with yen, and yeah, you can see the it came in at 120. Was it 122? Michael just brought up 122. We were looking for 150. So a little bit weaker than expected. Weaker jobs market, guys, and I think that's going to feed really into the dollar as a whole. And you know, you start looking at the labor market and some of the weakness that we're seeing there. I think NFP is going to be a miss. Friday's data, as Kman pointed out, I think is going to be pretty important too. I agree, and I'm already shorting the dollar ahead of the data. I'm already, you know, kind of planting my feet into the sand with dollar shorts. And if you're in the ForexAnalytix chat room, you know exactly where I'm trading and what I'm trading it and how I'm trading it. And same with Kman and a lot of other traders that post what they're doing right inside of the trades room. So if you want to be involved here, remember part of being with ForexAnalytix is having access to the chat rooms, knowing exactly, you know, what we're thinking throughout the course of the day. If you want to be able to talk to me or Kman or Ryan or, you know, a lot of our traders, Greg is here today and he's in the chat room too. From time to time, you know, make sure you're here and this is where we can all have a discussion. Now, you can do that through trial of ForexAnalytix, which is only $1 for 10 days. Or as Dale mentioned, today is the last day. If you take a trader funding program assessment, you'll get a one-on-one consultation with me. I'll walk you through. I'm trying to coordinate with a few traders from Australia, which is always challenging because it's either going to be really early in the morning, like 2 o'clock in the morning for me, or really late at night. But I have one-on-one consultations with people going through the trader funding program. This way I can tell you that, what tools you have available to you. And also I'll give you some ideas of how I passed assessments as well. So if you want to learn how to take advantage of this volatility, this is your last day to do it. Trader funding program. Check it out. You can get to it right from our website. Dale, we have the FOMC coming up today. Is the Fed going to cut rates today? I know what your answer is going to be, but are they?
They're going to cut by a half a point.
Oh my God, I did not know what your answer was going to be. No, jokes aside though, is it possible? And I think it's possible. I'm going to just throw that out there. I think it's very small possibility, like less than 10%. I think that they might not want to look political and say, you know what, let's just cut rates now. If we're going to cut rates, in September, let's just do it now and get it out of the way, so we don't have to, get the public backlash. It's a small chance, but they could. But what do you think the Fed's going to do today, Dale?
Try and well, this is exactly what they'll do. Talk out of both sides of their mouth.
That's true. Of course they will.
So that you'll be able to take away anything you want from that presser. But
then that means bear or bulls are going to win, because they always do, in a situation where you can extract whatever message you want. So that means
all
you've
you
got
have to do is follow the 10-year and know that the Fed is behind the curve. So, where short-term rates are and where the 10-year is. So, anyway, I think that the Fed follows the market, doesn't lead the market.
Okay. Kman, you have any thoughts on the Fed?
I guess I wasn't the best guy to ask about the Fed, because every time they have a meeting, I put up a blues song by Johnny Lang, and the title is "Lie to Me, Tell Me Everything's All Right."
Well, I think best case scenario is if you guys are expecting like a dovish Fed, we're not going to get a cut. If we did, like I said, it'd be a shocker. But I think they're going to lean dovishly, prepping us for a September cut. What do you think, Kman, about the Fed today?
Unchanged and door wide open for September.
Yeah. I figure that's probably what we're looking at, with the Fed, and this is going to, I think, give the bulls another argument to try to jam us up into all-time highs in the S&P. I mean, let's not forget that the S&P is holding the 38% retracement. Despite Microsoft's miss, not miss, but Microsoft being punished after hours. Look at the S&P. I mean, we're rallying today. And remember, we got more of the Mag 7s reporting today. We have Meta. We have Qualcomm is after the close. Tomorrow is going to be Amazon and Apple after the close. So we've got, still earnings that are driving this market. And if you have a Fed that's like, okay, they're going to stay, there's another, 2 months of not hiking, or not cutting, excuse me, you're going to have bulls simply just planted why should I sell? And, we're probably, rally back to 5,600. But yeah, remember, Apple and Amazon are going to be tomorrow as well. And, so remember, we got the Mag 7 going through. And by the way, the dollar yen is probing 150. So what's your take here on the dollar yen? And it looks like Grega is here. Grega, are you here?
Hey, yes, I'm here.
Hey, your microphone's pretty light, buddy.
Yeah, it's better now. Okay.
What's happening? And by the way, I need to thank you for stepping in for Ryan at the Flow Show and hanging out with Kman during the European, show. And by the way, Kman, thanks for filling in without Ryan here too. I know it's a lot to handle. But if you guys are up in European hours and you're not listening to these guys, you can go right to our website where it says webinars, go to the Flow Show. You can get to the link right here.
Where's my picture?
I don't know. You have to ask Ryan. where your
Ryan,
picture
you will
is.
never allow it.
Yeah. Well, Grego, what are you seeing right now with this yen?
Well, I mean, that's a pretty aggressive fall. I think that maybe Fed today could start to stabilize stock market a little bit, and this possibly could bring Japanese yen slightly to the downside for some kind of a pullback. But overall, I just think that based how Nikkei is looking, I'm afraid that after rally on stocks, we will see another sell-off coming still by the end of this summer. And what I'm thinking is that Japanese yen in general will see much more upside if we get this rally.
So, just looking at some of your Elliott waves here, I mean, it looks like you are just pretty much, sell rally mode, right?
Yeah, exactly. On all of those yen crosses in particular, because I mean, if we are really in this risk-off mode, then I just believe that Japanese yen obviously will stay and act as a safe haven, especially if Fed will also turn to maybe surprise with cuts, as you discussed earlier, but as you said, you doubt yourself. But sooner or later, they will do it, and possibly this will cause even more damage on dollar yen. It should.
Yeah. All right. Well,
longer term targets, Grega, 144.
I think that I would say 145. But
Okay,
if we get 145, if we starting to see some recovery pretty soon. If not, then 140 is the next level, of course.
Okay, got you.
Well, dollar yen is trading below 150 right now, so is taking the stops. That seemed pretty logical. It looks like we might head down toward, well, we are coming down towards channel support. And Kman said he has his trend line a little different. It depends on how you're, matching up between the highs and lows. But we are well below the 200 DMA right now. So intraday, Greg, how low do you think this thing will go?
Intraday.
Yeah.
Oof.
Yeah, the next 5 minutes.
Yeah, give me 5 minute analysis.
You can comment on the past 5 minutes. That's also intraday.
Yeah, I mean, if I have to consider that we are going to see some start of the US session, then probably there will be some back and forth move. So at the start of the sessions, flows can change. So I would not be surprised if we see some stabilization pretty soon.
All right. Well, we are getting close to the 161% extension of the last move higher, which was just over the last couple of days. Real quick, coming up here for today, we just got the ADP data. The ECI, the employment cost index, is going to be pretty important. We have Canadian GDP. I haven't really paid much attention to the dollar CAD, but I know. I mean, I've got a position on it, but I know
coming down a bit in sympathy with the other dollars right now.
Yeah, a little bit of pullback, and I guess the thing about the dollar CAD is we are struggling at the 161% extension, horizontal resistance, more importantly, long-term triangle resistance. So let's watch this Canadian data as it comes out, and like I said, we have the ECI, the employment cost index, and if that comes down a little bit, it's going to be it's gonna weigh on the dollar across the board. And you got to watch this euro, because this euro ahead of the Fed, we're at pennant resistance. So
coming out
let's
of here,
take a look.
man.
Here's the Canadian GDP. Let's take a look at that really quick. And as it's being released, and I can see Mish is here. Mish, it's good to see you, and I can't believe I tried to give you a message on Twitter, and you weren't following me anymore. I'm like a little hurt.
No.
Yeah.
Oh, no, no, no. I'll have to fix that. If that is the case, then it was not anything that I did.
No, it's, you know what? Twitter's weird like that. I've actually, it's happened to me before. Like I've unfollowed people where I'm like, hey, how'd that happen? But yeah, it's one of those things. I went and I was like, wait a second. But good to see you, Mish. Hey, real quick, let's cover this data. Here comes Canadian GDP, stronger than expected. So that dollar CAD is slipping a little bit further. And what did the ECI come in at? Weaker than
Just
expected.
below the 1% mark.
Deflationary data coming in, and wait till AI takes a hold of the U.S. economy. You want to talk about deflationary you know, forces coming our way? AI into the workforce is going to be very deflationary, in my opinion.
Yeah, they've already created a hologram of you, so
That's right. That's right.
You
And
won't
that,
have to get up at 4 in the morning anymore.
we are
Okay.
all being replaced. We are all being
Okay.
replaced. But you know who's going to be able to talk about that is going to be Mish. And so good to have you here, Mish. But I want to say, Kman, Grega, thank you guys so much for being here. Remember, Grega, you know, you can follow his analysis, his Elliott wave analysis, not just with him on Twitter, but he also, you know, provides the analysis on ForexAnalytix. Kman, thanks for being on the Flow Show and being there every day. And Dale, thanks for guiding us every day, of course.
Okay, my pleasure. Team, thanks, Kay. Thanks, Blake. Welcome back, Mish. I missed you last time. Good time to talk to you with all the tremors in the market here. What's on your, top of mind for you lately, Mish?
Well, a couple of things. Number one is everybody's celebrating the yay, disinflation, deflation. And even I was starting to think that perhaps that overlay chart that I have as my pinned tweet, and by the way, Blake, I am now following you, so apologies for that, was going to be a thing of the past. You know, it wasn't going to happen. We weren't going to see the 1970s rhyme in the, here we are in the 2020s. But I'm not 100% certain yet that that's the case. So, because we have so many cracks that could create a sort of reemergence of inflation, as we know. I mean, the things have not really calmed down geopolitically. If anything, obviously, we've seen an escalation Middle East-wise. That's one factor. The debt, obviously, is still really, really high. And the one thing we were sort of anticipating was that the Fed might start to do exactly what everybody's anticipating, which is lowering rates at a time when it seems like a lot of what's happened with CPI and it's coming down sort of followed the path of what happened in 1977. And then we know things started to ignite again. Now, back then it was an oil crisis. I wouldn't necessarily say it could be an oil crisis. Obviously, we produce a lot more oil than we did back in the 70s. But it just still, I'm not 100% convinced. Let's leave it at that. Now, does that mean that I'm buying every commodity under the sun? No. I mean, I always have a gold position for the last several years. I actually added to my silver position yesterday. And it's up a little bit. I can see that here. Only because I feel like the metals will let us know my classic signs for inflation. I always love to talk about sugar. That really hasn't done very much, but it also hasn't gone down very much either. From 28 cents, yes, it's gone back down to 18. Now it's back over 19. But I would need to see that really start to explode to the upside, and we haven't. So that's the first thing, is that I'll give it up at the end of 2025 if we have not seen any kind of reemergence of inflation. And I'll go, okay, great, Fed, you did an unbelievable job. Congratulations. We are now back to somewhat of a normalization.
Well, you think the Fed had anything to do with the bear market in grains, which has really contributed to this disinflation talk and the decline in crude up until yesterday? And you've just brought up an oil shock. Most people are bearish crude, talking 60-ish and 40 later based upon global recession. But all it's going to take is one event in the Strait of Hormuz to change that picture dramatically. So, you know, I've always been cognizant not to really be playing the short side of crude, because you could be right and overnight have it right in your face, like today.
Yeah, right, exactly. Well, yes, I agree with you on the crude side. I haven't really traded the oil market per se in a while, because it has been more on a decline. After it got through 80, it came back down. The $76 a barrel has been great support, and we're getting a bounce from there. But you mentioned grains. And I don't know if we necessarily have to see the grains participate in a major rally to say we're going to go into some kind of super cycle. There's other elements. Now, we talked about the obvious ones. There's still a stress on natural resources when it comes to AI and data centers. And even though we started to see some of those things go up, like silver, like copper, coal, et cetera, they haven't really exploded yet. And so, and I say yet because if truly we are going to continue to increase the number of data centers globally, we do need these natural resources, which are A, still in somewhat short supply, B, vulnerable, like you said, to any kind of supply chain, whether it be the way oil would be or something else. And C, the miners have not necessarily produced as much as they need to produce. So it doesn't just happen overnight that you just like say, oh, we need more copper. Okay, let's just pull copper out of the ground. So I don't really want to start with the narrative of this, but it just sort of struck me as I was talking to somebody else yesterday that, you know, people have gotten very complacent about it, and I'm just still have it in the back of my mind. And gold is still well over 2,400. Whether it's a flight to safety or somewhat of a sign of future inflation or what have you, it's still a sign of something that merits paying attention to.
Okay, so gold really has been the superstar. We've had quite a few false starts. You know, I'd like your in silver. It all, you know, always looks like it's breaking out, and then for some reason that doesn't happen. So
Well,
I'd like
right,
to
still,
I would just like to focus on really let's break out the telescope here, Mish. And I have to agree with you that I don't have to, but I do. The gold market is one of the only ones that's really given a real good signal long term. And when I say that, that means I'm looking at monthlies, right? So, and then I want your comment when you look at some of the other ones. So here's gold, clear
right.
cut breakout over 2100, right?
That was
Here's
that was
silver.
yeah, yes, gold, yeah. I
Okay,
agree.
silver. I don't know, you know,
Well, silver came,
maybe
yeah. You know, there are
platinum, platinum.
yeah, let's take a look at the platinum chart.
Maybe.
But it's
But
not,
I mean,
it,
and even palladium, and you know, I always learned that in a true bull market that the white stuff goes first, leads. You know, like the gold silver ratio, et cetera. Look at palladium.
right.
So gold definitely, silver. You know, it's got to start coming back. Here's the gold silver ratio, which is really it's been a great instrument. And I also want to ask you if you see a correlation between the gold silver ratio and, say, for example, the dollar, even though the dollar was weaker. Do you think that why would they be tied together?
Well, the dollar going down, obviously, we didn't even talk about the dollar, right?
Yeah,
And
yeah,
again, to me, what I see with the dollar right now, and for quite some time, has just been more of a massive trading range. I mean, if you really want
yeah,
to stretch it out, you could say between 103 and 106. We're getting a lot of support as we get closer to 103, as we're going to probably start to see again. And then we start to see a lot of selling coming in at 106. So I haven't really paid much attention to the dollar per se as a great lead indicator for what's going to happen, unless we either rally over 106 or we break
yeah.
down to 103. Then I would start to say, Okay, that's going to be obviously another sign that perhaps we're not really out of the woods when it comes to all these stats on CPI and PPI and PCE. But I have been much more interested in the Swiss franc, and that has really. Can you put up an FXF chart so people can see it as an ETF?
Sure.
FXF.
Oh, I love it when Mish starts talking currencies. Let's do it.
Well, I know this is a little bit of, started out with a little bit of silliness in that in March, in the middle of the night, I got up and I heard FXF in my brain. And I've never really thought about, just like you said, Blake, I'm not a currency trader per se. I watch the dollar, I watch the relationships with the euro and the dollar, but Swiss franc, I'm like, why would I possibly be thinking about that?
Well,
And
that, I mean, from our, our formation as traders, that was the safe haven currency, right?
exactly. And look how in May you had that exhaustion
Yeah.
low, and then it gapped up and it never took out that low. I started buying it at around 97.70, just mainly because of the technical, but obviously because I was like, that's an odd dream. And yes, because of what you said, it is, obviously the Swiss is considered a flight to safety because it's a stable government, it's tied to gold. And so now, if you take a look at what's happening here, you can see that it really looks like it's breaking out. So then you have to think, what does that mean? So that's the currency that I've been watching and actually been in. And if we get closer to 103, 104, I would probably start to take some profit, but I'll keep a
Yeah,
core.
that could be a right shoulder up there, Mish.
Yeah, you never know.
Right? Here's
Yeah.
your neckline, here's your left shoulder, here's your head.
Well, to get a
104.
move from 97 to 101, even in a currency like this, is pretty good.
Yeah,
I mean,
yeah.
you don't get too greedy with these sort of things. But let's
Okay.
switch gears because the other thing that I had bought and sat with a little bit because I was convinced that we would see the TLTs go higher is the TLTs.
Okay.
Let's put up the TLTs.
You got it. There's a weekly.
That's a weekly. And look at that weekly chart. You can
Yeah.
see the breakout, obviously. You can see that we're getting over the 50-week moving average. And you could also see that if we get out over 95, that yield will obviously the long-term bond yields will drop. I've seen talk of disinversion of the yield curve, and then I saw talk yesterday of reinversion of the yield curve. I don't know if I necessarily focus so much on yield curve, but I'm just looking at Scott Henderson, harmonic measure to 104.76 on FXF. Thank you. Anyway, going back. So with the TLTs, it's such a double-edged sword with them. I mean, this is something to really talk about here because what would ruin the whole narrative we just talked about, Dale, you and I, about the potential of, a 1979 coming back looking different, but rhyming, would be, of course, if the long bonds going up with the yields coming down turns out to be more recessionary than actually inflationary. And that's why this is a very difficult time.
Accompanied by risk off in equities.
Exactly, because right now TLTs are already starting to outperform the SPY.
Yeah, by not really railing, just by moving sideways, it's outperforming.
Right, especially when the SPY has come off, although it's held critical support here at 5,400 level.
Right.
If that breaks down under 5,400 and this continues to go up, the TLTs and yields start to slip a little bit, regardless of what the Fed says. I don't know if I will be more interested in an inflationary move or start to think more recession, and the Fed waited too long to
behind the curve.
Easing the throttle exactly behind the curve. So these are all the things that are in my mind. Now, in terms of trading, of course, a lot of what I base outside of the commodity realm is my economic modern family.
Yeah. How are they?
Well, obviously,
any of them on lithium after the last few weeks?
Well, only the transportation sector has really been, I think, the laggard. And of course, a lot of that had to do with the airlines and CrowdStrike. So I don't know if we're getting a true picture of the robustness of how goods and services are moving in this country if we're just looking at the transportation sector because of that. However, while Gramps, Russell 2000 obviously everything started to rotate into that, which is the healthiest sign we can see for the US economy. We're kind of again starting to consolidate in this range, and we need to get through 227 because that was the area from where it broke down last year. Actually in 2022 when we started to break down, 227 was a big area, and we've gotten up there and we haven't been able to get through. But right now, what's even more interesting to me is put up XRT, grandma. And while you're putting that up, I'll say, of course, regional banks also took a nice pop after being underwater for so long and ranging KRE between 55 and 60, between 50 and 55, or really 45 and 50, took out
KRE.
Yeah, okay, so KRE has to get through 60, 61. That's where it broke down.
What a difference a year makes from bailing them out to leading the way.
Even if you
and you know what, those two markets you just brought up could be the reason, because there's part of the reason they were folding was their books of long duration getting creamed after that big bear market in bonds. So bonds recovering takes some pressure off their books.
Exactly. This is why it's so hard. I mean, if you're an economist right now and you're trying to say, this is definitely happening or that's definitely happening, I don't think that really, you can actually say that, because like you said, you're exactly right.
You have to be so nimble right now that it's tough even for some pros.
Right, but put up grandma.
I'm not including myself in that.
There you got first one.
uh,
So XRT retail, right? And it's a nice,
yeah.
I mean, we know that consumer discretionary retail has been really blasted over the last several months. And now XRT, which has a nice blend of staples and consumer discretionary, kind of like KRE, was in this big range, and now we're starting to pop up out of this range. And if we can go to the regions closer to 80, 79, 80, and take that out, well, I mean, not only is that a great sign for the US economy, but it would be an incredible opportunity to get into something that has well underperformed and now may have major catch up. And of course, the implication is the consumer, as much as we've heard a lot of doom and gloom, is doing well, and that could really be the best sign for the Fed in terms of the soft landing. And that's why I say soft landing, recession, super cycle of inflation coming. Usually I can be very clear about what I see. And right now, I think you just have to be very prepared for any of those three. And you have to watch those key areas we just talked about, right? The silver, the gold, the bonds, the dollar. You have to watch the small caps, the banks, and retail. And if you just really focus there, I think you'll have a pretty good idea of what, once we get through the summer, will be the thing as we get into the fall. And of course, the election, that's a whole other thing, but I never really want to ever trade off of any kind of political guess, because as we know, you can't always figure out what a president is going to do, even whatever they're campaigning on. It doesn't really make much of a difference once they're actually in office. So, and the best example is EVs, right? EVs got crashed, which everybody thought under Biden would be a tremendous boom. And of course, oil has done very well. So, I mean, that's always my classic example of don't assume anything.
Don't even assume there's going to be an election.
Oh, wow. Well, that would certainly be inflationary, don't you think, Dale?
Well, we'll see. I think we won't, and if there is, we won't know who the president is for several months afterwards.
Well, that's
where do you think it's going to be decided? In Congress, the Supreme Court, or the streets?
Ooh, oh my God, there's a question. I like to think that it will be decided in the traditional way that, obviously we have the Electoral College versus the popular vote.
Okay, and, Pollyanna.
I mean, I don't know. I'm hoping, but
yeah, well, yeah. Well, here you go. Here's hope. And you know what hope is? It's the oxygen in our life, and it's the carbon dioxide in our trading.
Well,
Okay, so it'll destroy you in trading, but we all need to have hope. I have hope too, but I've never seen a situation like we have today. Just think of all the volatility of an assassination attempt, a replacement at the ticket. You know, Michelle, I'm pretty bearish a dollar. I think we're going to come out to the downside. And when people push back, they say, well, Dale, aren't you worried about the instability in France when they were going through their elections and the UK? And I said, well, what country has more political instability than the US on the planet? And that's an unusual statement to make, but that's where we're at.
well, so we certainly included a super cycle of inflation as one of the potentials. And there
Yeah.
if we had anarchy, which is essentially what you're talking about, where we have no president really, or no recognized president by the people, and civil unrest that ensues, or just this
There'd
government.
be a confidence crisis, and who would want to own dollars?
Nobody, and who would want to buy gold and silver? Everybody. So
Right.
right.
Yeah.
So that's why I'm saying this is why I think this is such a unique time. I don't think I've ever been, and when I say ever, I mean since like a long time, decades, so
Or never.
prepared for major recession, major inflation, or soft landing. I don't know.
Yeah.
I don't
Yeah.
know. And I think that that's probably the best thing I can give to people is that you have to keep your eyes open for any of those scenarios and not necessarily get yourself too attached to one particular scenario until we have more evidence, and we don't, because this is an election year, and because, as you say, this could be very contentious, or it can go through peacefully. You got to say most people just want to feed their families, go to work, have fun, be left alone, and not really get so crazy. And of course, what we hear in the media is the fringe groups on both the left and on the right. They get the news, but I don't know if that really represents the majority. So we'll see what happens.
Well, yeah. What's the choice?
Well,
Check out. Anyway, I just wanted to, just show this dollar index chart. So we
okay.
haven't gone anywhere, and you're right. It's been range bound. But once in a while, after ranges are taken out, and I'd say that the big bear signal would be down here. I think
Mhm.
we're going down there.
Wow.
But
Well,
you could take a measured move from here to here on a breakdown from par that could give you 85 in the dollar.
yeah, well, you and I have talked for years now, right? And so, I was a dollar bear all the way up at 112, 114. I was saying that,
Yeah.
it peaked out. And so I'm
So
not
no
going to
one's
agree with
no
you. I
one's
think
paying attention now
yeah,
because it's been so, range bound. It's
range
lulled everyone to sleep.
kind of like KRE did. That's what I'm saying, for
Yeah.
months and months and
Oh, you
months.
know what I want to ask you, Michelle, is it's already come out that a Trump administration would want a weaker dollar. How did they accomplish it just because they want it?
Well, right. I mean, in order to get a weaker dollar, my God, I mean, well, first of all, obviously you would have to drive the interest rates down, and he's already
Okay.
talked about that. So, I think that would probably be the best way, or the best way. I mean, I hate to even use the word best, but a way would obviously have to be to get those interest rates way down again, and that would obviously put some pressure on the dollar. But, I don't know why that would be such a great thing. I mean, do you really want the US dollar to give people even less purchasing power than it
Right.
already has, even at current levels? That's the other thing about inflation. People focus on the wrong things, where purchasing power is so much less than what it used to be. That in and of
Right.
itself is inflationary.
Nominally, yes,
Hmm.
because of what it's pricing. And so anyway, that's their policy. So it's easier to sell things, that we become an export-driven economy. I think that's republicanism from, I think it may have been McKinley or someone else, tariffs and
Right.
protectionism. But you're right, a weak dollar isn't going to serve the middle class either, because they'll be paying more for everything.
Yeah, and let's go. You just mentioned something about, right, the other Trump policy is to have like 100% tariffs and
Yeah.
have everything produced in the US and make us a, extreme exporting country. All sounds great on paper, and it may be where we are in 50 years from now. But for right now, anti-globalism, bringing everything back on a reshoring basis, means higher wages for everybody, higher wages, doing everything at home, and having to spend the money to build the infrastructure to do that, then getting things out and not buying anything foreign, which of course, where the goods are cheaper, also sounds super inflationary to me as well. So when people say Trump administration would be inflationary, that's what they're responding to. I don't know if that any of that would come to pass. And this is my original point, which is if you're going to position yourself based on what either Trump or Harris now is going to campaign on, that could be a mistake. Just watch what's actually happening. And I think we just laid it out. We have the bonds looking very ripe here. We have the metal still very, very strong. Even palladium is not necessarily participating. We have the grains, not necessarily a big worry, but we do have now the NASDAQ coming back today, which means we may see more money going back into NVIDIA and some of the chip companies. Of course, people are saying that China's preparing for war, in which case that would affect the chip. But essentially, what we're seeing right now is that there will be certain raw materials that will continue to be strong because of the data centers, the geopolitical situation. And on top of that, we could actually flip more into a risk-off environment if the Fed was a little too late in easing up and the bonds start to really outperform the SPY. And it's probably a good time to be more relaxed. I am. I mean, obviously, there's always going to be things I'm interested in to buy. But I have from the discretionary side, a pretty light portfolio right now. And I'm just waiting a little bit longer before I start really getting super bullish. As I said, retail right now is intriguing me, but it's not quite where it needs to be to get extremely bullish.
Okay, I use my sister as an example, Mish, and we'll wrap it with this. And
Okay.
she said, Dale, I'm gonna sell right before the election. Okay, and then I'm gonna get back in the market after the election. And so when she told me that, I'm going, you know what? My sister is John Q. Public.
Uh-huh.
And if she's thinking that, there are multitudes that think it's clear sailing until the election, and then afterwards they could recommit. I think that's too pat, and I think that maybe what we had here in the last few weeks with key reversals and things like uh, NVIDIA and the NASDAQ and a weekly key reversal in the S&P, although NASDAQ looks to be the weakness, I would welcome a rally back towards 20,000.
I'm so sorry. I don't know
That's all
why.
right.
Yeah.
All right, so could it be that, Pat, that we're okay until the election, Michelle? Or are we going to have this summer scare and everyone that was waiting to sell until right before November might get a little panicky and have a summer shakeout?
That's extremely, almost look like that up until really
Yesterday.
yesterday, right?
Yeah,
And even though we're getting a pass because AMD is up a lot
yeah.
after the earnings, and by the way, Microsoft held in the after hours that key level of
Yeah, it's
390.
having a good day. It's only down 10 after being down 30.
Exactly, but I never really was convinced, even though it was a fantastic way to make money in the first half of this year, that the tech market is the key to a robust economy in and of itself. It really, as I said, it does have implications for raw materials, but it's not the U.S. centric areas that we really need to see robust, like the small caps, like the banks, like the retail sector, and like the transportation. Ergo, my economic modern family, they exist for that reason, for us to see, is this a tech rally that's bringing everything up? Are we a little bit too premature in anticipating that tech is going to be the answer to everything and all of our lives are going to be amazing because of tech and nothing else matters? Or do we really need to see the other areas behind that or maybe even leading that. So tech has its place, but really what we can see now is the US and everything that's been working.
Russell.
The Russells, right, exactly, participate. And that's another big question.
Yeah, that could be. But you know, it was my contention that what led the market up would lead the market down. And that's exactly what happened. Despite the big shift that we had into cyclicals and the Russell. So we'll see. I don't know if the Russell could support 20-30% decline in the NASDAQ. We had
probably
10.
not. Probably
We had
not.
10.
But
All right, so
it didn't do very
do
much though rallying while everything was going crazy. When Sister Semiconductors, my other member of my modern family, was constantly making new highs.
Right.
The family wasn't doing very much. So I don't know if we necessarily can say the logic is if tech crashes, that means trouble for everything else. I don't know if we can implicitly say that. But a couple of other things to leave people with some trading ideas. Things that really did poorly this year, like EVs, like solar energy. I'm looking for that to turn around as we get into 2025. I still really like the idea of the vanity trade, which of course would be totally tied to what we just saw in XRT. That is the result of the diet drugs. And we know that a lot of drug companies now are competing to create diet drugs, which means they would become more available and more affordable to the masses. We have a huge obesity problem. If that starts to be abated because of these drugs, think about what happens to these people who have not been able to keep weight off. What were they going to do? They're going to go get plastic surgery or fillers. They're going to start buying makeup. They're going to start dressing better. They're going to start exercising more because now they feel good. I'm looking at all those drug companies and also the companies that would benefit the most. And that I think is going to be another theme as we get into 2025. And these solar energy and EVs will come back, and also so will the infrastructure for that, and so will this area I'm talking about, the vanity trade, regardless, I think, of what happens, unless we have, obviously some major crisis.
Okay, Michelle. Well, you win the gold medal for your presentation today. You're at the top of the podium in my book every time you're here. And, I'll take my bronze. You could have the gold. And really, really was great talking to you and seeing you. And I wish you and your team to have a great summer. And we'll talk again in the fall.
Right, great.
And
go USA, right? Since you're talking metals, go USA.
Go USA. And Mish, thanks very much. Great ideas. You left us with some actionable stuff, and keep an eye on that dollar.
Okay, definitely. And
All
I'll be seeing you around the block,
All right. So here's our website, everybody. Check it out at Market Gauge, and follow Mish on X at Market Minute. And she has a lot of great videos, and you could learn a lot from Michelle. I always do. And keep the hope.
Okay.
Even though I'm a cynic with hope, Mish.
Right, I see your T-shirt, so there you go.
Keep the hope. It's not in Bitcoin, but it's hope anyway. So take it easy. Have a nice summer.
Thank you. You too. Stay
All
well.
right.
Thank you, Blake. Bye.
Michelle Schneider, and everyone check out her work. She's great at intermarket relationship and a very good trader. Thanks, Michelle.
Bye. Mwah.
So that's a wrap, everyone. Good luck on the Fed. What's the Fed going to do? She probably left. What's the Fed going to do? Anyway, guys, good luck the rest of the day. See you tomorrow. Don't just count your pips, count your blessings. Okay? Don't forget to do that. All right? Don't forget.